Good afternoon. It's 3 p.m. It is our normal time to talk about things that matters to you. Tax matters, right? So there's a joke going on saying that in life, only two things are guaranteed. Number one, you pay taxes, and number two, you die. Of course, there's three things that guarantee you have to be born first, then you pay taxes your whole life, then you die and you escape tax. What a miserable way to describe life, right? So that's not what I meant to do today. And today we talk about taxes. It's an interesting matter because I know you want to know. It is about using the standard mileage in 2025. So let me get you going with my prepared PowerPoint. Now, in using the standard mileage in 2025, it is something that you definitely want to know. And I know people goes, oh, it's really good. And then the went up again. And then there's a lot more to it. I want to tell you that, you know how I'm in this business for 28 years now. We have seen so many audits. I can't count them. There are too many. And anytime, every time, when there is an audit for a tax return, if you have a mileage claim on it, it will be a audit item. The auditor will look at your mileage. And you may ask me, out of all these audits you did, Ying, is there anyone had the mileage uh, done correctly and the IRS has not made any changes? My answer is no, not a one. No one ever did the mileage 100% correct. The auditor came, made changes. But of course, changes is not always just, oh, you claim too much, I reduce it for you. And we have, a couple of times I remember our client's calculation for the mileage was wrong. But it was wrong to the benefit of IRS. So the auditor was nice enough people, and they come in, they corrected, they give more deductions to our tax client who came for us to assist them for the audit, right? When you get audited, you can get people to represent you. You don't have to be the one dealing with IRS or dealing with DOL, and you can find someone to be your body double so they can do that for you. They can get shot by the arrows, but not you, right? Okay, so let's talk about what we have in store for you. And always, this is our website, communitycpa.com. And on our website, the onboarding with us, that button right here, and that is actually for you to onboard with us, which means to be our client without, having to call us or doing anything. You can just do it quietly, right? And you can do it at midnight and we will get back to you. Then you can also make appointment with us and you can support us by paying our invoice. I always consider the invoice that got paid from our client is literally the support we got from our clients for wanting to keep us going forward, to be that community pillar to support small businesses like you and myself. All right. And the client portal is where you land onto your document, and obviously you have to be a client to get a portal. So that's kind of places that you see all your document. Payroll portal, if you're doing payroll with us and you have this payroll portal that helps you to process your payroll for your employee. Then all of our videos, all of our webinars, like the one we have right now, and it's already being recorded while we are going, and it will be deposited to here, to the YouTube channel, Community CPA. You type Community CPA, you're gonna get into YouTube channel, and there you can find what I was talking about. So you will see history of videos, a lot of them. And right here, the magnified glasses you see here, if you type into the topic you want, it's like a Google search, right? You just type in what you want, and all the video related to that will come up. And then, of course, if you subscribe to our video, and then every time we got something new come up, you see the title. May interest you, may not, may interested. Your sister might be interested in it, so you can forward that to her. So this is where we give our knowledge free to our folks, and we want all of our small businesses to be successful. Only when you are successful, we can be successful as well. So we, of course, care so much that just like how we care about our own well-being, we care about yours. If you don't know about our firm, I want you to see these numbers. The 12,000 representing our clients. That's how many clients we serve. And 40 is the number of professionals. We collectively speak 10 different languages. Then we have 27 years that's, Community CPA's life, but actually we're going into 28 years. So we have 6 partners, 5 different branches in 3 different states. Then I myself also served on IRS Advisory Committee for 3 years. It's called the National Taxpayer Advocacy Panel. And of course, I wrote 2 books, right? Some of you know, and actually some of you come to our firm because of the book. People get to know us from different angle, right? But our smallest number is the most solid number. That is one goal we have to for our firm. We just have one goal. That goal is to serve small businesses with our heart and soul. We care about you. And there's no argument about that. And that's a period, right? This is the 2 books that I was talking about. I wrote, yes, I am the author. And the 2 books was published in 2019 is the first book, 2023 is the second. So I'm working on the 2 p.m. It's kind of fun because I have 4 books, 8 a.m., 10 a.m., 2 p.m. is how to expand your business. And 6 p.m. is how to retire from your business. Isn't that fun? If you ever retire. I didn't really write the number 4 book yet, so maybe I don't retire, so I'm not sure. But that was supposed to be a 4 series, and I supposed to write. I made this job for myself. And one day, and I got up and I'm like, I'm going to do appointment because I counted my appointment. I did 1,500 appointment in 1 year. So over the 20 some years, I did so many appointments. So I figured I just gonna write a book about my appointments. So that's how that idea comes about. No responsibility disclaimers because this is a free webinar. So you want to not count on everything, but study and vet your information through before you use it. Okay. All right. Cents per mile rate in 2025. 2025 cents per mile rate for business use of a car, van, pickup, okay? Panel car, panel truck is 70 cents. It's 3 cents more than last year. Remember 2024, 67. So folks, right now we're doing 2024 tax return. So don't use 70 yet. 70 is what you're going to use this year, 2025. But when you're tax preparer doing your taxes, make sure they're using 67 cents, right? So then you probably always wonder like this mileage rate and why it is the way it is. So on January the 17th of this year, like just, maybe a week ago, a national average price of a gallon of regular gas was 3.11 compared with 3.08 a year earlier, which is 2024. So that fuel price drives one of the factors in calculating the 70 cents. Of course, there's more factors: insurance, depreciation and other cost to the car, because your 70 cents, once you do the 70 cents, you cannot do depreciation, you cannot write off your insurance, you cannot write off your repairs anymore. That's all in one rate. Okay. All right. So how often does the mileage rate changes? Like, you feel like it changes a lot, right? Every year now, Ying came on board, Ying came online, and today said that it changed again. In 2025, it raised by 3 cents. So actually, it is adjusted annually, but sometimes, because of the situation, if the price going up too high, then you see that changes in the middle year, which we experienced that, didn't we, in 2023? So that is how the mileage changes. Is based on the real world situation, but normally once a year. Otherwise, the government can come up with any ideas and changing it every month if they want. It's just for the tax folks who do taxes and for the software company who are actually putting together this software to help with the tax preparers. They are suffering because they have to put in more language code to accommodate of this kind of requirement. How the cents per mile consideration is like when you have a business and you run business miles, and then suddenly and you want to know that how exactly that would benefit you or not benefit you. And I don't know whether you watched my webinar about 3 weeks ago. I did a heavy vehicle and home office webinar. And in that webinar, I say that if you have a heavy vehicle and you also have a home office, and that just helps you for deduction. And the reason we say that is because of the mileage, because of how much business miles you drive. So know that mileage is not just for the 70 cents of claim. It has also become a judgment whether this car is qualifies for business deduction or not. If you don't have enough business miles, and they're not gonna let you charge everything out for business purposes, right? So the cents per mile rate is beneficial if you don't want to keep track of actual vehicle expense, right? Simple. You don't track real expense, but you're gonna track on mileage, right? With this method, you don't have to account for all your actual expenses, like every time you put in the gas and the repairs, oil change, all of that stuff. If you want to use standard mileage rate, you must choose to use it in the first year the car is available for business. Okay, hear me saying that. It is the first year the car is available for business. I didn't say that it's the first year you got your car. You may got your car for personal use for 5 years, then the 6 years you began a business, that's when your car is available for business. So mileage, standard mileage deduction starts. You can opt for either the standard mileage or actual in the you can for the first year available, but let's say your first year starting your business is in March, and you got your personal vehicle going on and you use that for business, and whether you want to be a standard or you want to be using actual expense method to calculate the business expense, this is something that you can decide when you are in front of your tax preparer submitting your tax return. But once that is done, that car you were on standard mileage deduction cannot change to actual next year just because next year you did a big vehicle repair, cost you like $15,000, and you suddenly feel like, oh my God, I should have used actual so I can deduct this. Now I use mileage. I didn't drive this car for 3 months. It's not worth it. But you can change. Once that car become a standard mileage, it's gonna go on unless you change to another new car, right? And you want to keep record to make sure that your standard mileage gonna pass the auditor's audit. Remember I said that all of these audits I've gone through, as long as the auditor come around to the mileage stuff, no one ever passed with 100% or with A grade. Everybody got changed. And of course, there was two. I think there were two clients. I don't know, maybe three of those clients actually didn't change for worse. They changed for better. But the bottom line is, whatever they said, the mileage was not the same. The auditor agreed. So the key to track your standard mileage is to know your beginning of the odometer reading and at the end of the year's odometer reading. So you may say that, whoa, why? Why? Because you may have a mileage calculated for $35,000 miles. But if your odometer reading for that car is beginning and ending, it actually doesn't subtract into a 35,000 miles, that tells the auditor that your record is not accurate and you over-reported mileage. Or maybe you're saying that your mileage, this is the business vehicle because you drive more business miles than personal miles. You have more than 50% of miles that's for business. But if the auditor reading your odometer and realize that your odometer rating is 40,000 miles, but your business miles is only 15,000 miles that you reported. That means your car is what? That means your car is not a business vehicle, right? It is actually a majority for personal use and for business use is much less. So in that case, when you are deducting your car expenses, and especially when you deduct your business expenses using car expenses using actual method, and it will be prorated to where your percentage is. So with that said, the record keeping, the key giveaway today is for you to write down your odometer reading. Today is January 21st. So only 21 days past the beginning of the day you're supposed to read your odometer reading. Go into your car and write that down. And write that down every January, every December. Actually, what I told all my clients to do is to just take a picture of your car odometer reading and just put that in your album, put that in your phone. You will have it. So get into a long-term habit. Always take a picture of your car. The total mileage figure will be reported to the form 2106, right? This is if you use TurboTax or other tax software, the software will tell you where to put it. But the form name is 2106 is for reporting mileage. If the vehicle is purchased during the year and it's not new, record the odometer reading that first day when you got it, okay? And if you use this method, keep a lot of miles, keep a log of the miles driven. So there are apps out there you can use. I heard of several. I did not use it myself. From our client, I have not picked up one that client brags about it. So the record I saw from the client was not very consistent. So I know that you might have to do a little bit of due diligence and figure out how you're going to track your miles, right? And if you go on to, for me, if I need to track my miles, I simply look at my calendar because my calendar will show in the purple color that if I am out of town, if I am out of the office. Otherwise, I work in the office. I don't have a home office, so it's like I don't have any mileage. I just work in the office. But if the appointment says purple, that means I went to this client's place, then I can easily calculate what is the mileage. So you can do that as well. And you can deduct travel from the office to work site. Okay, so like from my CPA office to my client's work site, and from the office to the second business, or for driving on business related errands, right? Buying meals for coworkers and things like that. So, business errands. But mileage cannot be calculated between your home to your office unless your home office is your primary office. So we have clients, the primary office is home office, but they have a satellite office in different place, which they just rented by hour, like those co-op place, right? So those are not considered primary office. So will be treated as a work mile when you come from your home office to that office. So those are the ways to calculate. When you have those miles calculated and you times 70 cents, that's for your 2025 deduction. You times 67 cents, that's for your 2024 deduction, right? All right. So, of course, this is something I want everybody to know. You cannot use for 5 or more cars at the same time for your standard mileage. What they're saying is that, the client reported $40,000 miles driving, but it was among 4 cars. Like this car was driven for 5,000, the other car 25,000, then the other car 5,000, 5,000. So, the IRS said that don't do this, and we're limiting you. And if someone has 3 cars and 2 vans and uses them for business only, one at a time, they can use the standard mileage deduction, right? They use one at a time. They have 5 and under, right? But if someone has a car and 4 vans for businesses and the other people driving, it's all at the same time, they must use actual expense. You must not have claimed a depreciation deduction for the car using any method other than straight line. What they're saying here is that when you put the car into standard mileage deduction for the first year for yourself, and that car should not be the one that went through depreciation deduction, which is the business deduction, right? If you went through depreciation deduction before, your car is already used for business before, so obviously your business could be closed down, and then this car is no longer using for that business. But when you close down that business, because the car is an asset of that business, so the car has a different value to come out. And you bought it under your personal, become a car under your personal name, personal title. Now you put into a standard mileage deduction for your sole proprietorship, and those are considered a new car, right? New to you because it used to be owned by the other company. But just be aware of that. These standard mileage deduction really do not meant to compensate on the car with depreciation. And you should not have already claimed the 179 section deduction for the car. Otherwise, the car come out with no value, right? You must have you must not have those kind of depreciation going on when you have the standard mileage deduction for the car that you use. So that's what we call the limitation. So standard mileage rate applies. To think of that simply, it is a personal car for business use. Okay? And think of that. It's a personal car for business use. If you run that as a business car, then maybe standard mile is not the way to go. Okay? And we will touch on that. So per mile reimbursement, this per mile rate is also popular with businesses that reimburse employees for business use of their personal vehicle, right? So you see company doing that. They can reimburse the employee for them using their cars to go somewhere, but the employer, the business owners, just listen up. You don't have to do 70 cents per mile. You don't have to do 67 cents per mile, and you don't have to do any of those cents per mile. You can come up with your own. So a lot of times, the people set up those rates are to just generally the gas rate, like the 22 cents to reimburse employee for the gas they run per mile, right? Most of the car runs at least 22, 23 cents per mile. So you reimburse them that way. And these reimbursements can help, of course, can help to not spending money from your employees, and they're working for you already. If they do anything extra like that for the business and you want to pay them, right? So under current law, employee can't deduct unreimbursed employee business expense. So for example, our rate right now is 70. Let's say your company reimbursed them 30, so they got 40 cents they didn't really claim, right? So right now, before they could make up the 40 on their Schedule A, but no longer possible after the Trump's first term, like he changed Schedule A, so that went away. With that said, just so you know, that's how impacted the employees that you have in your company. When you cannot use standard rate, let's say there are reasons for people cannot use cents per mile rate, and it really depends on different situations, right? For example, and you have claimed it under actual expense method before. You can't use it anymore. You can't just next year turn into standard. It doesn't work that way unless it's a different car. Okay. And if the vehicle, is new to your business in 1 year, and then it doesn't really have a lot of mileage driven, and is new, and you bought it into the business, and it's not really driving a lot in the business, but you maintain it with insurance, with other things that you wrap the car, you did all kind of things to the car. So standard mileage is not going to really help you, right? You want to deduct the new car with a new depreciation. So especially if it is heavy vehicle, and we have that webinar we talked about, that's a big deduction. So you may not want to use standard mileage deduction. So if you want to deduct your car expenses via actual expense instead of the standard mileage, just keep in mind that the mileage is still relevant, because when let's say if you run a proprietorship and under Schedule C, and you decided to do actual expenses claim because your car is pretty old and you do a lot of repairs, you're worried about those repairs, right? So when you deduct these actuals, they actually ask you what's the percentage of the business use of that car. So for that reason, mileage going to come in. So you have to kind of decide how much was business miles, how much was personal miles. Then on this calculation of business miles, personal miles, again, it involves your log, involves how your odometer reading, all of that again. So just be aware, right? And when you do the actual expense deduction, you would include things like insurance, repairs, license, and the vehicle registration, stuff like that. You have repairs, you have depreciations, and you're gonna go a lot of things. You're gonna go a lot of things on the car that can be deducted. So I just want you to know that when you get into the actual deduction, and then you have a lot to remember when you wash the car, when you put in the gas in the car, so you have to have a way to calculate all these actual expenses. So here it says don't need a mileage log. What we mean by you don't need a purpose, date, and the things like that to calculate the mileage, so you can time 70 cents for that. But you need to know the percentage of you use for the car. So some folks, in practice, what I always advise our client is that if you bought a car for, let's say in 2025, you're going to buy a new car. When you buy this new car, you could put that car under your name, title, And then when you do business drive, it's a business use of personal car. But you could also put the car under business title. And that way, the car belongs to business already. So what you need to track is your personal use mileage. So if you take the car, went to Hawaii, no, you can't take car to Hawaii, but I mean, if you take the car, went to Florida, and you know that you're driving it for personal miles, then you should reimburse that to the company. If the reimbursement rate for the company is 22 cents, then you reimburse back to the company for 22 cents per mile that you drove on the company car. So you want to think outside of the box. When you buy cars, it is not regulated that you have to buy that car under your name. And sometimes the car dealership don't want to give you the car under company name because you are going to borrow their car loan. So they want you to put your name and also business name at the same time on the title. That's okay too. So you can use your name, your credit, your social security number to buy insurance and buy loans, arranging financing. But on taxes, you are the car is under company title, right? So you can actually deduct the car properly. So here are the list of things that we advised our client in terms of the actual expenses for the car. So you can see can include gas, oil change, repair, tire, insurance, registration, license, depreciation, okay, and the lease payments. So those are the things that you can get to know the actual expenses for your car. And all of these talk we have all the time actually requires a business person to calculate their business expense, to document their business expense properly. And when I say properly, I am talking about a systematic way to get it done. So that's why you see clients coming into our firm. They want us to do their monthly financial statement. I am pretty sure my client knows how to add up the income, knows how to add up the expense, then subtract each other and get a profit. My client knows that. But they still want a systematic way to produce monthly financial statement to track on different expenses properly with different categories. Those are just a organization skills that people master. At some point of time, when you just started your business, yes, you save, you cut corners, you save here and there. It's all understandable. Who did not come through that path, right? For entrepreneurs, we all come through that path. But at some point of time, when you know your business is growing, when you know you have people to take care of, your employees are on the book, and when you know all of these government compliance requirements are for your type of business, and those kind of responsibilities really should promote you to think professionally, to think about getting your business done properly. Yes, you spend money. Yes, you hire people and you hire professional, and that is a expense. But those expense, I view them as an investment because they invest in your long-term growth and they invest that in your legacy. And you don't get into trouble, you don't get shut down. And I literally have businesses making millions a year getting shut down overnight, and home broken, and spouse sick, and it's still going on. Now it's already almost 12 years to really cope with that. I won't say, oh, just because he's doing it wrong. I don't think the business owner was doing it wrong, but not being compliance and or being viewed as non-compliance by government agencies can cause huge troubles. So just, my 2 cents. I'm sitting on this side of table. I see a lot more things than any one of you who are listening to me right now. So I want to say that I'm not kidding with compliance requirement. Then I want you to know to do it right. It is the most important things in business. If you ask me what make a business owner success, it's because the business owner knows when to be on that standards, be above that standards in the business process, and know to do what at the right time. All right. So consult with Community CPA. As you can see, there are many things, right? We talk so many things about standard mileage deduction, actual expense, and they are so different. They're so different, and they have different reasons to become a different way. So make sure that if you already got a new car and started to going down onto this one of the paths, and you want to make sure you're doing it right, you can literally consult our firm to get that right answer. The way to consult with us is very simple, folks. You go onto our website and you go to that make appointment button. You will see our partner's name. And we are updating this page to give you our language. Each one of us, we speak a second language. So I'm going to build that into the site so you kind of see the language just in case you prefer. But of course, we all speak English, right? I'm not going to mark on English as a language. I'm just going to mark down the second language we speak. So that way, and give people a better view of who we are, and also give you a more clean categories of where we are in terms of advisory. So you can book our time, come into a video conference, and we will resolve your questions. I have gone to video conference. I would not say daily, but every other day. I have people coming online, booked my time, and paid the fee and asked for questions. I'll tell you, I have never had anybody who were disappointed saying that, oh, that 375 is not worth it. Never. And I always answer the question precisely, clearly. I don't run you around, and I will give you the answer. Luckily, so far, I had nobody come online, give me a question. I'm like, I don't know what you're talking about. I know what you're talking about. So I am confident I can help you. And my folks, they're so brilliant. If you think I'm smart, they're all smarter than me. I am not kidding. And that's the reality at Community CPA. Community CPA YouTube channel, subscribe to our channel. That's our website, communitycpa.com. And that email I gave you, Catherine at communitycpa.com, she is our ear. She knows our clients' questions. So if you have a question you want us to talk about on our webinar, you need to email her so she will give that to me, and we will prepare that for you, just for you. So you want to utilize this free service, right? To have us work for you. And we open 6 days a week, year round, not just for tax season, because we're that busy. And our 40 professional are on Monday to Saturday. So we have 2 work teams, right? Monday, Friday, Tuesday, Saturday. But the key is on Saturday, if you call us, someone will come on the phone. And if you're at the area our branch is at, and you can come to our branch. I will talk to you again, folks. I'm so glad to see you. Bye-bye.